Nobody's business is so complex that this can't be done. This is the big picture. Welcome back to another week. Craig, thanks for jumping in with us, mate. Marty here from Orb Services, having a chat today. Craig Cadell from CK Growth, mortgage broker extraordinaire and all-round good bloke. Craig, you want to just give yourself a bit of an introduction, let everybody know what you're up to and what sort of bread and butter day today is for you.
Hey, Marty, thanks for having me on board. It's
No
a pleasure. Mate, I was in Westpac for 30 years, variety of roles, all in around home lending and training mortgage brokers. And then about 6, 7 years ago, got out to start my own business, linked up with an existing firm and my business under their banner, writing all sorts of lending, predominantly home loans, but everything from car loans through to business loans.
Cool.
And busy as ever at the moment during COVID, which is good for me, but predominantly good for helping customers achieve their financial goals with regards to lending.
Finding a win-win, mate. It's always a good one. I need to reduce my mortgage payments. You can help me make it happen. All good all round. Tell me, it's so obviously one of the ways that people can reduce, like a mortgage or a loan, be it a personal mortgage or a business mortgage, is one of the main expenses that people are going to have. And if people are looking to minimize their expenses at the moment, even with a few things coming back in, obviously people are looking to minimize them. It's one thing to say, take a mortgage holiday, but you work for Westpac for 30 years. I've had enough dealings with the bank to know that the bank doesn't give you any free holidays. You're going to pay interest on that. That's going to be a very expensive thing. Is refinancing still an option at the moment? What's happening in the market? What are you seeing there as an alternative to still minimize or reduce your repayments, but not get that mortgage hangover from the 3 months or 6 months that you might put it on hold?
Oh, mate, you're totally right. Banks are big businesses. The 4 big banks in Australia make up 4 of the 5 biggest companies in Australia. So they're not about giving you a holiday. They're about making a profit. So in this environment, people looking for for savings, it's a great time to look at refinancing, and there's some really good offers out there too. Like I said, banks aren't going to give you it's not an actual. It's a gap. It's a holiday. It's not waiving any repayments. It's just delaying them. So whether it goes on, that repayment's tacked onto the end of your home loan in another 20 or 15 years, whenever the end is. If it is 15 years, well, that's 15 years extra interest you'll pay on those repayments that you've missed, which is not attractive to anyone. If you miss 3 or 6 months, it might be that you can make them up at the end of the 3 or 6 months. If your financial position's better, you're still paying extra interest because you didn't make those repayments. So, if you look at a simple case of I'll pick a $500,000 home loan, I did a few calculations, and a pretty reasonable rate at the moment would be, say, 2.8% people could be on, but a lot of people are on over that at 3 point something. But even at 2.8, 500,000, if you miss 3 repayments of around $2,000, that's about $6,000 that you're helping your cash flow, but delaying and still having to pay them down the track and pay interest on that. If you refinance to, say, 2.19%, and there's deals out there where you can get 2.19% and get $4,000 cash back from a bank for changing across to them. So that interest saving of 0.61 across a year is about $3,000 times 2, 6,000 plus 4,000 cash back. You say that's the way you can save yourself $10,000 in 2 years.
Yeah, right. So in the 2 years, because it's one thing to think that you may not hold that you may not hold that mortgage for the full term to gain the full benefit of that. But even if you refinanced again in a worst case scenario, so you refinanced in another 2 years, you're still going to be $4,000 better off than you were in the first situation by taking that option up anyway. Just cash flow there. Cash flow wise, you're going to be in that position. Right. There's going to be a bit of time and mucking around with it. Is refinancing, it's one of those things that people, sometimes have a bit of a burden about. You mentioned 2.8 as a bit of a reasonable amount. Is there a red flag figure for you in the market at the moment where you see if people are paying more than X percentage, should they definitely be looking at refinancing because they should probably be getting a better deal?
Look, in the mortgage type um, media, they talk about 3% quite often, but that calculation we just did, even at 2.8%, was talking about saving someone, I want to say about $10,000, and that's not in just cash flow. That's in actual savings. So I would think if your rate's at 2.8 or worse, you definitely want to have a chat to a mortgage broker about what better offers are out there for you.
Because RBA, correct me if I'm wrong, RBA has gone to 0% now,
RBA's at 0.25,
0.25.
and they made a statement that they don't have any appetite for negative interest rates. I know that in New Zealand they tried to go negative and they couldn't do it because they couldn't get the computers in the banks to make it work. Can we get much lower on interest rates? Well, I'm not an economist, but 30 years in the bank says to me we're by far and away the best deals. Fixed rates of like 2.09, 2.19 are by far and away the best looking offer that I've seen in my 30 years.
You've been broking or in mortgage for almost as long as I've been alive, mate, which is impressive, but not to say that I don't still look older than you. But it's as good as in terms of rates and interest. Like I remember my parents buying houses at 18%, in the 80s and 90s. So it's obviously a good time now. Beyond it, are the banks still, obviously there's a particular, you mentioned a scenario where, good rate, $4,000 cash back. Across the banks generally, are there still a lot of appetite to take on mortgages? Are they still hungry for that? Are they a bit risk averse for that with what's happening in the job market and jobs being a little bit more scarce?
And that's a good question. Look, they do, and banks have a responsibility to ensure that they do all the checks and balances to make sure that a customer, should be able to afford to repay the loan. So at the moment, in the time of COVID, they are asking specific questions about whether your position is affected by COVID already, or whether you project it to be going forward. They have to, I suppose, take our feedback as a broker and yours as a customer, but two, they're not silly. They know that if you run a restaurant, you're in a bit of trouble at the moment. So I'm seeing, but depending on what industry you're in and how badly you're affected, I've been, the last 2 months have been as busy as I've ever been. I'm seeing a lot of loans getting done. So the appetite's still there for business. It's just specifically how badly are you affected by COVID?
Yeah, righto. Well, that's good news and I would imagine that like anything, there's options and rates depending on where you're at in your scenario. So even if you are in hospitality and there's dramas with that, you're still going to have options. What are there options beyond refinancing? If somebody is considering taking a mortgage holiday, is it still something that they would be getting some benefit by having a conversation with you about? How do you sort of run through that with them?
Yeah, definitely, because we can get involved and help them out in liaising with the bank on that. Even worst case, just a simple chat about it to understand what their needs are. Look, always happy to help anyone with a bit of a chat and overlook at their finances. It's, what we do isn't rocket science, but if we've been doing it for a long time, there's, just about every customer I see in that position, there's some way that we could make their position a little bit better for them with, whether it's better rates or perhaps consolidating a couple of debts or some old, loans on lines of credit that are on old rates. And, people are, we're also time poor these days, that people don't really generally spend much time to go through and look over these things themselves. And the ones that do quite often do a good job themselves of finding a better deal for themselves.
Yeah. So it's definitely time to shop around, and obviously, mate, I know a few people that you've helped out and done some fantastic work for and got some great results for. So, and it's certainly talking to the banks, doing all that research myself is definitely nothing that I'm interested in. Part of why I want to have you on and a bit of a conversation about it. What else are you seeing? You're as busy as you've ever been. Is that can you tell us about any kind of, have you had any great success stories for people who thought they might be in trouble in a point where they couldn't get some finance, couldn't get access to loans that you've got a result for in recent times?
There's people that, sorry?
Oh,
There's people that,
obviously can't give away too many secrets in terms of specific details, but
No, but there's people that even you and I, that we're both acquaintances with that have applied to their bank for lending, and we deal with over 50 banks, so their appetite in various aspects, whether it's what you can afford month to month, or how much you can borrow against a particular property. If I give you a really, really simple example, if you've got a property that's under 35 square meters, hardly any banks will touch that, but some are fine with it. There's a million different little scenarios, and banks all have their own appetite. It's not as common sense or as simple as people would think. It's really that bank and people within that bank making decisions about where their risk appetite extends to. So a lot of what we do is getting loans approved for people who've been to their own bank, been declined, and then they're sort of lost. Where do we go? And someone says, "Oh, I know a good mortgage broker." The key thing that I get, I suppose, frustrated, or the thing that makes you most happy for the customer is that they come to us and they get a better deal than they would have got if their bank had approved it, because we look amongst the other 49 or so lenders and find the best deal. So it's frustrating to think that if their bank had approved it and they hadn't come to us, they would have been paying more for the service.
You don't have to pay a broker to do the job that you don't want to do. Why not engage them? That's one of the great mysteries of life. But one of the things that I know you do very well, and I've seen some data on this, having a little bit more insight of your business than most, but you've shown me where, the change in lenders that you're using over the periods of time. Like I remember seeing, 36 months ago, you were using these lenders were really popular, and 24 months ago there was these ones, and 12 months ago it was these ones. Where's the appetite at the moment? Do you think, are you seeing it mostly, are the big four banks still trying for things? Are some of the smaller lenders really getting aggressive and coming to the party with it? Where's the action at the moment?
Well, the big four, well, definitely some of the big four still have a big appetite. If you look at a couple of them are at 30 working days to pick up a new loan request that you send in. So that's how busy they are. They've got a month's worth of work sitting there waiting already. In fact, longer, because 30 working days is more like 6 weeks.
6 weeks.
You'll see, if you're reading the financial press and keeping up with everything, you'll see that 6 months ago, statistics came out of certain banks who'd fallen behind on their market share. That's not good for their share price. That's obviously not good for their ongoing profit, etc. So they will, expression I like to use is pull their pants down a bit. They'll give away some special offers, but that special offer will last, for however long, maybe years or the life of the loan, etc. So what happens is, purely from a pricing point of view, interest rate, whoever's giving the best deals away changes all the time. A lot around who's got appetite of. It can be as simple as they need a lot more business quickly, so they've got to give away some great deals to get that. When I'm assessing which lender I recommend, you're factoring in, well, firstly, it's got to be one that will approve the loan. Secondly, what's a great, the price on it, the time frame. So if you're doing a purchase, you can't wait 30 days for someone to tell you that it's approved. So you'll be cutting some lenders out there.
Yeah.
But yeah, to answer your question, there's still appetite, still, finding homes for 99.9% of the loan requests that we get. There's still lenders doing low docs. There's still lenders giving you, for self-employed people, you can get a loan based on just your accountant signing a form saying you can afford it, or 6 months BAS, or 6 months statements. Up to not up to 100, not up to say 95, but up to sort of 60, 70, 80% LVRs. There's a lot of variety in the market. That's why a good broker is doing what they do all day, every day. There's a lot of, there's a bit of complexity and a large variety of options. So, there's the rare customer who can go out and do all that work for themselves. But you make a good point. If someone's not charging a fee for it, because we get paid by the bank, and what each bank pays us, by the way, is pretty much the same across all lenders. So I don't have any incentive to use one bank over another. Like you said, I've done presentations where I've shown her I've used these banks. That it's all about, in a small business, for me, it's all about impressing your customer or getting them such a good deal that they want to refer you more customers. So it's about giving your customer the best deal.
Good times. Mate, appreciate coming on and having a quick chat. Is there anything that from the sort of hot topics right now, parting tip that you would give to anybody? Before I ask, I'll give you a bit of an opportunity to wrap in with some contact details and give everybody some plug in there. Obviously, great resource for you to be able to help anybody out looking at all of their finance options. Um, in the space of home loans and that, what have we missed? What's hot at the moment that we haven't covered, or have we given it a good rundown?
No, I think we've covered that. If whether you're looking for a loan or if you've already got one, and probably the key is for people who are getting new loans are getting good rates. The banks make their money generally on their back book, and they don't. Existing clients don't get the good rates that new clients are getting. So the key point I'd make is if you've got a home loan and you didn't get it, say, in the last 6 or 12 months, give me, or if you've got your own broker, great, but give me a call and I would think it's highly likely that we'll be able to save you a serious amount of money. Yeah. Contact details, I'm on the net under Craig Cadell Finance. 0467 202 822. Every one of my customers has my direct email, my direct mobile number. We've got an office. We've got 5 other brokers in the office. We've got office staff. It's a business. That has the 1300 number, etc. But I want everyone to come direct to me because I'm here for them in the long term as a one-on-one contact, not some 1300 number where you wait on hold for half an hour at a bank.
Mate, I can assure you that one of the most appealing things about this is for me, the most appealing thing is having the details and say, hey, Craig, can you sort this out? Not, hey, Commonwealth Bank, can I spend 4 hours on hold waiting to talk to somebody who probably can't answer my question anyway. So, mate, appreciate you coming on, giving us a bit of a rundown, letting the people know what's going on. I am excited to hear that there's plenty of appetite from the bank side of things, and that refinancing is still a great opportunity at the moment, and also initial finance as well as refinancing. Certainly a lot of good opportunities in the marketplace for people to save $1 on one of their biggest expense items. So, mate, thanks very much for coming on board. Really appreciate it.
Thanks, Marty. Great to Orb Services, helping people, giving great advice, and thanks for letting me be a small part of it.
No troubles at all, mate. All the best, mate. Have a good one.
Have a good day. See you, buddy.